With the $182 billion bailout of AIG in 2008, the Federal Reserve and the Treasury put U.S. taxpayers on the line for the full cost and risk of rescuing a failing company and protecting a small but influential group of companies that were exposed to it. That's the take of the TARP Oversight Committee. The chair of that committee, Elizabeth Warren, joins us now from Washington. Thanks for being here. We appreciate it.
It's good to be here.
Reading through this report, it's a pretty scathing report at how the government handled the AIG bailout. You conclude that the bailout was not the only option. What should have been done that wasn't?
Well, what we talk about in this report is that the New York Fed describes itself as having had only hours to make a decision and that it could only do a binary choice. It either would bail out in full 100 cents on the dollar using exclusively taxpayer dollars, or it would let the markets collapse. And what we did is we reviewed tens of thousands of pages of documents. We took hours and hours and hours of testimony and interviews, and we reject the notion that it was binary. What we say in our report is that the fact that the time was so short is in part the making of the New York Fed by not having attended to this problem when it was very clear that AIG was falling apart. And then we argue that if they'd had a little more time, there were a lot of options between for private rescue, for a combined public-private rescue, for negotiating with creditors, for haircuts. So it's really to try to explore a broader range of options. And the reason, I want to say this on this, Poppy, we give the New York Fed a lot of credit. We recognize that they probably pulled us back from the edge of a depression. But there is going to be a New York Fed or a Treasury Department that's going to face this kind of problem in the future, whether it's 60 days from now or 60 years from now. And what's important is if we don't learn the right lessons of what happened in AIG and do a thoughtful analysis, we won't know any more then when we hit these problems than we knew last time. And the costs were just very high last time.
Have you gotten a clear answer from either the Treasury or the New York Fed on why the decision was made, 100% taxpayer-funded bailout, outside of them saying we were rushed, we only had hours? Have you gotten any other answer?
They literally keep describing it as a binary choice. I cannot tell you, Poppy, we have had this conversation for hours. We have had it in print, we have had it in testimony, we have had it in private meetings with them. They keep saying it was an either-or choice. It was either 100% bailout or let the markets collapse.
Right.
And I just have to say, you now have gotten to the part where there is real issue. This panel says, no, it's not. And I want to emphasize, we say no, it's not, and it is important looking forward that no New York Fed in the future take the position that it is a binary choice. We identify other options because the Fed has to know about those and think about those before it ever spends a penny of taxpayer dollars, much less $183 billion.
Even the former CEO of AIG, Hank Greenberg, says, why on earth did the government come in and pay out the counterparties at par? Why not just give government guarantees? Aside from that, the question, will taxpayers get their money back, as the current CEO of AIG, Robert Ben-Moshe, says they will? Will they?
Well, we don't know. Let's face it, Poppy, the bottom line is the American taxpayer has become a partner of AIG. And if AIG's business goes well, if they really can put together a terrific insurance, they were once a terrific insurance company, if they can regain that momentum and they become a valuable producing company again, then the answer is the American taxpayer will get its money back with interest, as AIG proposes. But if that doesn't happen, and look, these are tough markets, if that doesn't happen, then the American taxpayer won't. I mean, the way to say it is, the American taxpayer right now is at risk. We are in partnership with AIG, whether we like it or not.
Elizabeth Warren, thanks for joining us today. Appreciate it.